Welcome to Markets Now. I'm Michelle Rook along with Brad Kooima with Kooima Kooima Varilek. We're seeing kind of some mixed trade in grain and livestock futures today. And Brad, let's start off talking about the cattle market. First off, live cattle futures back to the plus side today. And boy, we certainly held together after what looked to be maybe a day of fun profit taking their end of month. But we held kind of where we needed to and bounced, didn't we?
Well, I thought so too. Yesterday was interesting, and the way we came back from the jaws of death was also very encouraging. It's nice to see the follow through, at least so far today. Yeah, talk about holding. October cattle held right on the 40-day moving average. That's one of the first spots that funds look at, and I would agree with your comment about seeing some profit taking from the fund community and maybe from others as well. You've seen a kind of a general decline of open interest here over the last 10 days or so. I don't really feel too bad about that. It is the 1st of August. This would be a time of year where you'd have a little bit of a hard time rallying as a rule, but it's also a time of year where you start to thinking about, okay, summer lows, are we getting a bottom in here? Are we going to start to see a little rally in the beef as we move toward the Labor Day? Of course, the beef rallies on Labor Day, right? That was the excuse why beef went up after the Holcomb fire, even though we killed way more cattle after the fire than before. Sorry, note of sarcasm, please. So anyway, no, I thought the market came back well, and I wouldn't mind it if the spreads were a little different today, but at least we're higher.
So the funds, are they going to continue to defend this long position, do you think, here?
Well, in my opinion only. They do until they can't. It works until it doesn't.
Right.
One of the things that I think, we talked off air a little bit about what the sensitivity to an algorithm is. Now, there are some fundamentally based algorithm type trades that go on. And I can give you a recent example of after the cattle inventory report. Look at the way they stormed into the deferred months, June and August cattle of next year, keying off of that cow number, the lowest in 52 years. So I think that that's why I think it's kind of interesting today that decent Feb are the best, because that's kind of the slot where I think you've got the most supply side friendly news, particularly if we go to this heifer retention deal where they hold these heifers in the north, turn them into cows, less yearlings, less supply, and balance that thing what's been the last 2 years where we've had just an excessive amount of heifers on feed. So I would say that, yes, they'll stay unless we get some sort of big aberration, black swan, call it whatever you want to, that breaks the market far enough to get them out. Right now, I would say you'd have to get October cattle someplace below 173 to really see that kind of technical problem that would create that kind of liquidation, and that's quite a ways down.
And some of the pressure also came from a week of sloppy, very quiet cash trade or limited cash trade. What are you thinking about this week? Because we didn't have very much negotiated business at all last week, but are packers going to need cattle this week, do you think?
I think it's a great observation on your part about the low negotiated trade, the lowest in several weeks. And it's not lost on me that those are weeks when the cash is lower. I believe that the two are connected. So yes, the two-edged sword of that is, okay, do you have enough formulas this week to use, or you're going to have to come out and compete? First week of a delivery month, historically, there's more captive cattle, although I would say systematically, maybe not as many as sometimes in August because of the discount futures, but there's always seems to be more availability of those kind of cattle the first week. So I thought maybe this week they would try it again, try to be lower. This futures rally might change that, but and then by next week though, I think that then the chain runs tight, and I think you've got a producer in the north, especially, that's so current that he's going to say, you know what, these cattle aren't fat anyway. Let's see what happens. And then I thought maybe by next week we'd start to grind this cash market back higher and start to see the box beef come back pretty good too.
Okay, well, hopefully these higher futures today will help give the feedlot some resolve. I've also got to ask you about, packers have been cutting kills here artificially, trying to push up the product market, trying to, get their margins back in line. Where are we at in terms of demand, though? Is this demand still there?
In my opinion, yes. And to note your cow kill, or the cutting the kill back. They did it for real last week. 619,000 a year ago was 666,000. So they're trying, but it'll probably prop up the beef, like you said. To me, we've talked about this. Demand is different in beef than a lot of other stuff. Okay, you can't really store it for very long, right? We don't throw any away. How much can you sell at how high a price? That's what demand is about. And I think going through even the summer doldrums here, and our next move ought to be a little more of a beef feature as we get closer to Labor Day. I think demand is alive and well. And I guess I would also mention not just domestically, but globally. I'm looking at the comprehensive beef statistics here again this week, 15% for export. That's crazy good for beef. That's like pork-like numbers. So you're not going to get me on the demand bear bus here, not just yet.
Okay. Let's talk about demand, because obviously it has been pretty good over in the hogs, helping to push this market into new heights for the move again today in the August contract. August is going to go off the board pretty soon. We've got this big discount in the back months. So will the back months continue to push higher here, do you think?
I'd like to, be the first to admit that I'm out of step with the hogs. The market trades
everybody has said that. So
yeah, well, I think I misread Prop 12, and I think others did. Thought that maybe on the backside of the Prop 12 thing, we'd had some, there's so much pent up buying going into it that I thought we'd see a slackening of demand, blah, blah, blah.
Right.
That hasn't happened. And I think now you've got a market that the players are maybe the public, people like myself that are negative, and then you got the fund community that's got this market in a hammerlock, and then they're long and they got a pile, and it just keeps working, and they keep buying it. And so you got a fund community that's pushing the thing. Now, way back, I'm old enough to remember trading pork bellies. The old saying back then used to be that you had to sell discounts and buy premiums in the hogs. The market's smarter than what you think. So it's going to be a little difficult to sell October hogs 18 underneath the August here. But my view would be fundamentally based, and that is I know what this isoine market's been like, and I know how many of them are offered and how little value they have, which would tell me there's an oversupply of them. I can't help but be supply side negative, but the market right now trades much stronger than I had expected, and I'll be the first to admit it.
Nope, you wouldn't be the first, and you won't be the last. All right, grains. We're trying to bounce in the soybeans here today. Corn's been kind of moving quietly sideways, but we hammered that market yesterday, taking out weather premium. Do you think it's justified? Will we see more downside pressure?
Well, I think there's a little difference in the two markets, in my view, anyway. First of all, let's start on the corn. If we're going to go ahead and accept the 94 million acres, and how can we not? Because that's just the way it works. Okay.
Right.
I'm a bit jaded after 2019, but that's the number we're going to deal with here, at least for a few more months. So you don't have to have a perfect crop to end up with a lot bigger carryout, but I still think there's an argument of where we're really at. If we're at a 176, a 174, I'm kind of more in that line myself down there. Plenty of places that are way less than ideal. But the market seems to, be keen on the idea that the forecast is good enough that we're going to have enough supply. And most of us, at least I do, recognize the fact that demand, especially in the corn thing, has been really poor. I guess I think we test the lows. I think there's a chance that we'll trade below $4 for a little while longer when it's all said and done. Bean deal, we finally got a little China news, huh? We're finally competitive in the world market again. We're not in the corn, by the way. I think old crop beans probably have a little bit of a toehold here. If the forecast holds and August is milder, more moderate, wetter, I think the beans are vulnerable for a breakdown into the mid-12s in November beans. So I'm afraid I'm not the most fun guy to listen to if you're a row crop farmer, but that's, I guess, the way I see it.
All right. Thanks for joining us. Brad Kooima with Kooima Kooima Varilek. That's Markets Now.